In this video, we're going to be talking about the have your cake and eat it overseas tax planning strategy. And what this is all about is about maximizing where you're spending your days in order to get the maximum tax benefit. So we're going to be talking about how you can spend time in Dubai, the UK, Europe, basically all the countries that you want to enjoy, picking the very best times to visit each countries, and also what's going to give you the maximum tax and wealth building opportunity. So I guess the first place to start really just about what we're trying to achieve here, because ultimately before you start spending time in different countries, unless you wanted to travel, what's your intention? What are you trying to achieve? And in this instance, the primary objective is going to be to pay less tax so you can build more wealth. So you would want to make sure that your personal tax residence, we're not talking about corporate tax residence today, that's a separate issue, but your personal tax residence is in the country where you're paying the least amount of tax. In this case, Dubai, where there's no income tax, no capital gains tax, no inheritance tax, and so on. So you want to try and make sure that you are tax resident in the UAE and the UAE only. It's quite possible to potentially be tax resident in a number of different countries, so you need to avoid this because each country will probably, especially the UK, will try to tax you on your worldwide income and gains. So if you were to take dividends from your Dubai company, but the UK were to try to argue that you were a UK resident, well actually all of that would be taxable in the UK at the much higher rates than Dubai. So you need to try and make sure that firstly, you are tax resident in Dubai. And in order to achieve this, you need to spend at least 183 days in Dubai typically in order to be considered tax resident there. But it's not just that, so you can't spend 183 and then 182 in the UK because the UK do not want to lose you as a taxpayer. So especially in those early days where you're just starting to lose your UK residence, it's actually quite difficult to escape the UK tax net because obviously they're sad to see you leave and your wonderful contribution to society through your tax income. Therefore, what you need to do is make sure that you spend as little as possible time in the UK, certainly enough that you are not, well certainly so little that you're not considered tax resident in the UK. This does vary massively depending on your circumstances, such as number of ties to the UK potentially and exactly the reason for moving overseas. A lot of people that we work with move overseas by full-time employment. So they've either set up their own company in Dubai where they will be working for that full-time, or they've got a job over there. And where you work overseas, you can basically typically come back to the UK for about 90 days a year on leisure, then another 30 on work-related activities. And so basically we say about 90 days is what you can spend in the UK. Therefore, you can spend 183 in Dubai, 90 in the UK, and then that pretty much gives you another 3 months for leisure, Europe. The way this works out on a calendar point of view is during the summer, Europe's fantastic, Dubai is too hot. So what you do is you spend the winters in Dubai, the summers in Europe, the UK, and back to Dubai, and then that is actually the, have your cake and eat it. You spend enough time in Dubai to have your tax residence there, and to escape the cold European winters. You can go back to the UK for the summer when actually it's probably the only time you want to go back to the UK. Nothing quite hits like a UK summer barbecue. And then when it isn't so good in the UK and it's rainy and it's cold as it is right now, well actually you can go to Europe and enjoy the culture and the finer weather. So that really is the perfect scenario. That's what I do, that's what we help many of our clients achieve, is actually looking at what businesses do they have, how can they move them overseas, how can they restructure to take advantage of this and save over and upwards of 50% in taxes, corporate taxes, income taxes, so that they can have more cash flow and build more wealth. Quite often clients and kind of people in our network send videos to me, TikToks about this 3 months tax residency and things like this and say, oh, can I just move to Dubai, spend 3 months there, then the rest in the UK? Well, sorry to bust that myth, but absolutely that will not work. And I just want to kind of touch here is, especially in the international tax, offshore tax planning space, there are a lot of people that aren't qualified, especially when you get to the Dubai side. People will try to sell you anything and everything to get your money, say yes, yes, yes. And then actually what we find is that doesn't work with HMRC. We've had clients that have come to us and said, okay, we could set up a company in Dubai and do 100% charge from the UK profits over to Dubai. The guy that set the company up told us that would be fine. Unfortunately, that person doesn't know anything about UK taxes and they're not looking at your overall best interest. They were just looking to set that company up and that's it. And that is quite often what we see. There are so many people, even on YouTube, that put out content, which obviously works quite well, in terms of getting the clients in, but then ultimately they fail to look at things as a bigger picture because they're not qualified. So when it comes to international tax planning, you need somebody that's qualified, regulated, and all of that good stuff, minimum chartered accountant, ideally chartered tax advisor. So before doing any form of international tax planning with anybody, if you're a UK taxpayer, you need somebody who actually understands the UK tax system. Because Dubai, that's where it's easy, there are no taxes. But ultimately, if you're a UK resident and you've got assets here and you're looking to potentially come back here, essentially you need to make sure you get the UK side of things right, because that's where it's going to be expensive if and when it goes wrong, and ultimately when HMRC find out. So definitely make sure you are getting the best advice from somebody who actually knows about HMRC. Because there's so many people, you need to make sure that you are spending the right amount of time in the UK. If you go over too much, well actually the UK will tax your worldwide income and gains. It's as simple as that. The hardest part for most people is looking at how long you can spend in the UK, but typically around 90 days is the average. But again, that does massively depend. You could have one single unique factor that makes it less than that, more than that. So definitely look at your specific circumstances so that you know how long exactly, because one midnight too many and there goes your tax savings for the entire year. So we've talked about this in previous videos where you've got a UK company, you've taken dividends out, or you've sold some shares, got capital gain. Well, actually, if you come back within 5 years, they are taxed in the year that you become resident again. So you do have to be 5 full years of non-residence to get those tax-free. So definitely make sure you're aware of that, because if you do 2 years and then come back the 3rd year because you get the days wrong, well, actually you've got to repay it then. And then this kind of leads on nicely to the next topic in terms of just general questions and queries that people have about the international tax planning stuff. You know, they're UK resident at the minute, they want to become non-resident. Most people, it's probably a short to medium term thing, especially with Dubai. We don't find that many people want to settle down there, have kids. We've had a couple that we've worked with and helped relocate there, but the vast majority, this is a wealth building exercise. 5, 7, 10 years, utilize the 0% tax the 50% or so tax savings, so they can build long-term wealth, invest that companies, properties, and so on. And broadly, if you go back to the UK, except for the 5-year rule that we just mentioned, where you've got gains or income and dividends that relate to the period where they were accrued whilst you're UK resident, well actually, if you come back, as long as it's a clean tax year break, nice and easy, that's all there is to it. So all the money that you've earned whilst you were physically non-resident, that's the tax on that is locked in, it's paid at 0%. You can bring that money back to the UK, no issues at all. So it's quite straightforward to actually come back to the UK if you wanted to do that. The only thing to mention is that 5-year rule again. But other than that, you could literally go overseas for 2 years, gonna work like crazy, build up a lot of cash flow, then come back. Those 2 years worth of income and those tax savings, that's locked in. You can send that money back to the UK, no issues there at all. And then also it's worth mentioning, a lot of people say, can you still buy UK property whilst you're a non-resident? Absolutely you can. UK property is still one of the best investments from capital appreciation and income point of view there is out there. So absolutely you can send money back from your bank accounts in Dubai, whether it's personal or corporate bank accounts, over to the UK limited company to actually buy and invest in UK real estate. You can get mortgages on similar terms to the normal typical buy-to-let deals you get, probably a little bit more expensive on the interest rates, but other than that, it's very accessible. 25% deposit, and then you can continue building up that long-term wealth pot for UK real estate. Can you still send money back to the UK? So whilst you're non-resident, can you send money back to your personal bank account in the UK whilst you're living in Dubai or wherever else you might be? And the answer to this, yeah, absolutely you can. So from a tax point of view, tax is all about the money when it's earned, given to you, and so forth. So as long as you've paid that 0% income tax when it's earned, that is it locked in effectively based on your residence. You can send that money to wherever you wish. You can send it to the UK, Guatemala, anywhere you wish, and there's no tax issues around that because quite rightly the tax has been legitimately declared and it's paid. There's no issues there. So if you've got properties around the world, which I do, you might need to send money back to the UK quite often, cover mortgages, living expenses whilst you're in the UK and so forth, or even just UK savings and investments. Yeah, absolutely you can do that. You can send money from your personal Dubai UAE account over to the UK, and there's no issues from a tax point of view around that at all. What do you think to this strategy, guys? To have your cake and eat it. You know, it seems too good to be true in terms of you get to live in Dubai, pay zero taxes, you get the UK at the best of the time, you get Europe at the best of the time. It certainly is a fantastic opportunity at the minute. Are you looking to take advantage of this? Do let me know in the comments. Will I be seeing you out in Dubai soon? Do let us know. Thanks for watching, guys. Please do give this video a thumbs up and remember to hit subscribe. Bye for now.